Herkese merhaba. Piyasalara özel bir parantez açalım. 2025 yılı altın için adeta rekorlar yılı oldu aslında ve 2026'ya da Venezuela kaynaklı yeni bir jeopolitik şokla başladık. Peki jeopolitik riskler, işte faiz beklentileri, küresel belirsizliklerde altının seyri nasıl olacak 2026 yılında? Bugün Dünya Altın Konseyi Küresel Araştırma Başkanı Juan Artigas'la buluşuyoruz. Mr. Artigas, thanks for joining our program.
Thank you so much for having me.
Actually, we entered 2026 with a major geopolitical shock, starting with the Venezuela situation. I'd like to ask, how do these sudden geopolitical events like this typically affect gold prices? Are their effects short-lived or more structural?
This is a very interesting question, and we've done quite a bit of research on the topic. So we done analysis specifically using the GPR index as a proxy for geopolitical shocks or geopolitical events. And what we know from our modeling is that there's both a short-term and a long-term effect that can transmit to gold. The short-term effect, in the short term, a movement of about 100 points on the GPR index tends to translate to about a 2.5% increase in the price of gold. Okay, so whenever there's events and shocks, it does tend to have an immediate effect. Now, whether this event is more transient or permanent depends on the longevity or the impact of these types of events on the global financial markets and global economy. So, in fact, actually, over the past couple of years, geopolitics have played an important role in gold's performance.
Mhm. Looking ahead, is the bigger risk for gold a geopolitical de-escalation or a faster than expected normalization in monetary policies?
Yeah, we actually published our outlook towards the beginning of December. And what we were discussing is that, gold is going to react to a combination of factors. Generally speaking, we focus on four factors: economic expansion, number one, risk and uncertainty, number two, opportunity cost, number three, and momentum, number four. As it stands, we do think that geopolitics will continue to play an important role as we look forward, but also the effect of lower interest rates will likely have a supporting factor or a supporting effect onto gold demand, gold investment demand specifically, as we've seen in 2025 as well.
Mhm. Is there a specific type of geopolitical risk that gold reacts more strongly than the others?
Generally speaking, whenever there's a more direct impact on the global economy, so actual, economic output or just trade, or if there's also an effect on financial markets.
Mhm. For gold investors, timing is always a concern. So, do you think is gold still attractive after such a strong rally? It's increased over 60% last year. Does valuation now matter more? What do you say?
This is a very interesting question, Ming, and it's a question that we're getting quite a bit. So, from our perspective, gold is a strategic asset. What we mean by that is that it makes sense for investors to look at their objectives and the portfolio composition, but gold tends to have a positive effect on performance over the long term. Now, as you mentioned, of course, gold had a really strong performance in 2025, increasing by about 67%. So I think it's the fourth largest annual increase since 1971, right? So it was a very, very, very strong performance. Now, again, we do think that gold continues to play an important role in asset allocation. Why? Well, because there's higher correlations between bonds and stocks, right? So usually bonds tend to help diversify risk in a portfolio, but because they are more positively correlated with stocks, people are using assets like gold to hedge some of that effect. Now, of course, there are factors that can push gold prices down in this environment, especially if there's a very widespread resolution of trade and geopolitical risks as, as one outcome. However, that is not necessarily guaranteed. And as we saw at the beginning of the year, geopolitics are still a factor influencing gold performance. And from this perspective, we do think that investors would benefit from having gold as means to hedge their risk in the portfolio, especially since our analysis shows that the investment market for gold is not truly saturated. While there have been positive flows, we still are not at the same levels we've seen in previous periods of risk, like during COVID or during the global financial crisis.
Mm-hmm. So we know that the increases in gold prices are always long term. For example, if gold starts to increase, it increases for a couple of more years in the coming years. It was the case in the history. So shall we also expect again double digit or even triple digit increases this year as well?
Well, we don't directly forecast the price of gold. What we do instead is look at various scenarios, macroeconomic scenarios, and how gold may play in those scenarios. So from that perspective, we analyzed a few different conditions, and we think that if there's, for example, a deceleration in the U.S. economy and some risk around these levels in the gold price or in global financial markets, gold prices may increase somewhere between 10 and 15%. Now, if risks significantly increase and are more widespread worldwide, whether it is a full recession or a different type of geopolitical situation that increases risk, we could see higher returns for gold in that environment, potentially, up to 30% or so. Now, there's another environment if geopolitical risks significantly reduced, at these levels or if interest rates are held at where they are or even increasing at these levels, that could create headwinds for gold and therefore push gold prices down, maybe up to 20%. So again, it really depends on how the macroeconomic conditions evolve, but there are circumstances and events in which gold prices can post double-digit returns in this environment.
Why do you think gold is still functioning as a safe haven asset in today's financial system? Some argue that gold's safe haven status is being challenged by alternatives like crypto. Do you agree?
Well, not really. Actually, we even saw that performance in 2025 with a very, very different profile between the really strong performance for gold and not necessarily a particularly strong performance from crypto assets. In fact, actually, the difference is fundamental. While there are some comparisons between gold and crypto at the surface, the reality is that the composition of demand and supply is very different. Demand for gold has a dual nature. There's the financial investment component that has been gathering quite a bit of attention, but gold is also utilized as jewelry around the world. It's also a really important component in electronics, right? So there's multiple sources of demand, not just one source of demand. It's not just about investment. It's not just about, price expectations. It's really about a very well balanced demand structure that helps make gold extremely different from other assets. It also has a track record on performance that supports that, safe haven, store of wealth role that it plays. And that's one of the reasons why investors continue to buy it around the world.
We know that cultural aspect very well in Turkey, actually, because we have a strong cultural relationship with gold, from weddings to long-term savings. How do you think this cultural factor shape gold demands compared to other countries when you look at Turkey?
Yeah, Turkey is a very important market for gold. In fact, while in terms of absolute terms, also relative terms, you have countries like India and China that purchase a significant amount of gold annually. Turkey is still one of the top countries, even though it's significantly smaller in size and area to China, India, or even the US. And still, it gathers quite a bit of, or it creates a lot of demand for gold. So it's extremely important, as you mentioned. I think that there's a very strong cultural affinity. It helps Turkish investors to preserve wealth. by hedging, whether it is currency risk or inflation risk, or just general uncertainty in markets, as well as the role that it plays culturally from the way that you can use it as jewelry as well in many circumstances. So it is a very important market for gold for sure.
In terms of gold reserves, what is the ranking of Turkey in the world?
So the Turkish central bank ranks number 10 in terms of holdings, 11th if you count the IMF. So it's a very important, central bank for gold, holding reserves. It also, and this year, actually in 2025, reported data up to November, it would put Turkey as the fifth larger buyer of gold, right? So it's a significant part of the strategy. What is interesting as well is that gold can be also used in the capital requirements of commercial banks in Turkey, which is very different from other markets, and that makes it very unique because the central bank holds not only its reserves but also it works very closely with the banking system in Turkey to make gold such an important component of the Turkish financial fabric.
In Turkey, we often talk about this under the mattress gold. Are there any estimates of how much gold is held this way in Turkey?
Well, as I mentioned, Turkey is an important market for gold. I don't have, on top of my head, a estimate directly of the amount of gold, but I would tell you that is one of the, Turkey is definitely one of the largest holders overall of gold. It is also true that Turkish people buy gold in jewelry form. They buy gold in bar and coin form, but there's also many ways in which they can buy gold and store it at banks, as we mentioned before. So it's actually, there's so many different ways in which they can, take advantage of gold as means to protect their wealth.
Is this phenomenon unique to Turkey, or do you see similar patterns globally under the mattress gold? I mean, how significant is privately held non-financial gold worldwide?
Well, I mean, there's not all of it is held directly, as you said, under the mattress. I mean, it is held sometimes in privately managed vaults or banks or various other forms. But there's direct ownership of gold by private individuals around the world, and we estimate that about closely to about 17%, between 17 and 20% of gold holding or above ground gold stocks are held by private individuals in all of its forms. So it is still a very important part in which investors access gold.
Do you see a shift from physical gold to digital gold?
Well, it really means on what you mean by digital gold. If you mean in particular tokens, that is just a nascent phenomenon. It's another way in which investors are accessing gold. But there are many ways in which investors can buy financial products that are backed by gold, including, for example, gold-backed ETFs. That by now there are more than 120 of those funds around the world, including one that is listed or some that are listed in Turkey, and collectively all of these funds hold about 4,000 tons of gold. So it's physically backed financial instruments that give investors access, and they have been growing quite a bit over the past several years.
Juan Carlos Artigas, World Gold Council Global Head of Research. Thanks for joining our program.
Thank you so much for having me today.